slow trend. Because you got to remember, right, a lot of guys who have shorted here, as it comes up, yeah, it's failed, but that's why I said here, you got to be careful on the yearly. Either. It could have gone either way. And I started thinking to myself, if I remember correctly, because don't forget, it was only 2-3 days ago. I vaguely remember thinking to myself, it's quite risky, right? And I didn't actually take the trade. So let me go and have a look, actually. When was it? It's the 21st. I'm just looking in the chat to see. Yeah, I did not trade on that day. I just didn't take it. Did not like it. So basically, yeah, it's overstretched, right? And then I wasn't trading in the afternoon. I'll be honest with you, I may have taken a stop out on this day. Who knows? I didn't actually trade it, but I might have tried to get long when we got into sort of more of a healthy area for me to try an imbalance. It's definitely one of those days, I'm going to be honest with you, around that area. 33, I might have tried to get long. Okay, I was just looking at this because I did say to you that even though we're at +1 SD, when it pulls back in, don't forget, we're now gone, monthly would change here, right? It would be prior value area, breakout pullback. So we would put here prior value area, change that to a breakout pullback. Bullish target would be above. Okay, and then quarterly, it's not really gone imbalanced. I mean, we've broken out above the 1 SD, but that's not enough, right? Let's be honest. It's just messing around. So as we pull back into sort of the 1 standard deviation, think about it, right? What's the rhythm here? Look, before the market sold off, what's the rhythm? It's the 1. Okay, now in the morning, we're at the +2 SD of the monthly and the weekly. Guys, see, you can see it for yourself. +2 SD, +2 SD. When we pull back in to sort of a normal trend or fast trend, which is the rhythm of the monthly, look, monthly, fast trend, rhythm here was more of a normal trend, wasn't it? So I need to put that in. Weekly, normal trend. Then, and where is the normal trend? Well, you're going to obviously mark this stuff. It's around here, isn't it? About 50, 60. There it's around 50. So I probably would be eyeing 50, 60. Okay, so let's go up. If I saw an opportunity, I don't know how I would have done this. I might have tried to get long there, okay? And I might have got stopped out. I don't know if I would have tried it again. Problem is, you've got this big gap here, right? It's a bit of a risky one. But yeah, I'll be honest with you, I might have got stopped out. I didn't trade on this day. I just seen what I'd written. I was quite busy. In the morning, I had no interest because obviously we were quite stretched. And in the afternoon, I was busy, so I wasn't around. And you know, for all I know, probably knowing me, I might have been stopped out on this day. It's not a big deal, right? You can't win every day. So yeah, there you go. Okay, and then let's move on to the final day. On Friday, which I was buying, but let's just finish up with that day and see how we ended up. Sorry, give me a second to just clean this all up. Okay, so again, let's start with the weekly. On this day, coming into the morning session, what would you be thinking to yourself? Clear as anything. What is the weekly doing? It's in a rotation, right? It's not going anywhere. It's in a rotation. market condition, it's no longer imbalanced, it's rotation. Right, normal trend, prior value area still breakout pullback, rotation down here. Very bullish, isn't it? You expect it to go to the other side. Let's be honest, this is incredibly bullish. No wonder I was buying this market aggressively on Friday. It's a very, very bullish market. Monthly, guys, we spent the entire period above. We're clearly imbalanced. The rhythm has changed, no denying that. We've gone from a fast trend into a normal trend, but we've held. Don't forget, you're coming in after the market has held. And I remember talking about this in the Discord chat. You can have a look at it. I said, guys, these guys are going to get squeezed, okay? People who sold overnight expecting some sort of continuation, they're going to get squeezed. Right? You can go and have a look. I know I said it. These guys are going to get murdered. We've got short. Look at the delta. Minus 6,000 net contracts, right? These guys are all in, basically. They've bet the house on this thing. I shouldn't even laugh, but they're going to get squeezed. And that's what happened. That's why I was very bullish of this market in the morning, and I was buying it. So again, monthly, look, let's be honest, its condition is imbalanced. It's no longer a fast trend. So all we can do is we can just adjust this and say, well, it's imbalanced. And what I would do is I'll put normal trend question mark. That's a question mark. Are we going normal? Who knows? Maybe. Plausible. We're no longer 2SD, so that's not a problem. And prior value area, well, we're on the cusp of it. So it's prior value area. It's not bullish. It's more of a question mark. Just keep an eye on it. Nothing really. Rotational, again, quarterly hasn't changed. Yearly, the sellers tried, right? Do you remember I said this slow trend the day before? Because we were at plus 2SDs and whatever, I was worried that it might turn here as people like sort of longer term real money type guys. Look, it doesn't matter. I already said it doesn't matter who they are exactly. It could be a group of them, but whatever. I was obviously thinking they might come in. They haven't. Clearly, people have tried shorting. It's failed, right? It's obvious. It's failed. You've come in the morning. Big clue. Your line in the sand should be this area. You can have a look. I said it. 32, 32.40 again. Huge area. So look, there was nothing from there. Nothing from there. Nothing from the quarterly. Nothing from the yearly. So really, this is where I'm thinking. All right. Well, there's a good chance for the market to go up. How can I fine tune that? Is the DVA, the daily, allowing me to do that? So developing value area is condition rotational. What's the rhythm? Well, look, we've gone plus 2SD, so why can't we go 2SD the other side? Okay. This is why I was quite aggressive in the morning. I think I was expecting us to push a lot higher than we did. And you'll see, I believe the last position I did get stopped out of here, but I had quite a lot of contracts that I managed to take good profits on. I mean, we're talking, a good 40, 50 ticks that I got out of the market before getting stopped on. And this caught me out a bit, as in I didn't take a hit or a loss on it, but it just was, oil being oil. And then once we went back above, that was it, right? It was business as usual. Oil does this. All markets do it to some extent. You can see it was a stop run. Delta's fairly flat. Held the minus 5,000, but price has breached and we went back up. But look, the daily, the DVA was rotational. The rhythm was, kind of a plus 2SD. And then in terms of my CVA, I either could have targeted it from inside, but I was up here. We had a nice breakout value pullback already in play. Okay, so my hypothesis clearly, A, or maybe that would have been my B, as in straight up. A, obviously I do like, as I said, the small pullback and then up. So that could have been, sorry, that would have been my A, B, and then C, as you know, I like to do the ones that fail. So if we start to come back down below here, I can't remember exactly what I said, but I presume I might have been talking a lot about 32 to 32.40, that, you know, if we start to build value below this area, I would be getting exiting. So that would have been my C hypothesis, right? Guys, look, I know it's not easy, right? So that's done. We're done for the week. I'm the first to acknowledge it's not easy, right? Of course I know it's not easy. You know, it's taken a long time for me to be able to put all these moving parts together. It is a lot of moving parts, but there is no other way, okay? This is what the market is doing. You know, you've got different players with different perceptions of value. There is no indicator, all right? I know some, not all, with all due respect, I know that a lot of you get it, and you're like, fine, I know there's no indicator, I'm just going to have to figure this out. But I know some people will be thinking, there must be an easier way, there must be something that tells me. Can you see why it doesn't work, right? All that stuff, it does not work. How can you have an indicator that tells you what real money guys are doing, what hedge funds are doing, what asset managers are doing? What do you think it is, a crystal ball or something? No. These guys are real people making investment decisions, right, based on so many different factors. The only way you're really going to be able to get inside the minds of them is send a survey individually out to millions of people. You can't. What's the next best thing? See what they're doing, market orders, transactions on their particular sort of perspective, and then bring it all together. And it is incredibly hard, but what else is there? There isn't anything else. You can do your algorithms on your microscopic time period, like on the depth of market, but again, you've seen the competition there. You know, these HFT houses are spending millions, if not tens of millions, hundreds of millions. I mean, silly money, right? This is really the only thing that's going to allow you to beat the machines, is bringing all of this together. So I hope that was useful. Let's quickly look at ES, right? And then that's it. And then obviously we'll do videos, we'll do Zoom stuff. Don't worry, we're going to do loads more of these. And whatever I get an opportunity to record, I'll obviously include it in the section. Hopefully there'll be lots of other sort of examples for you. But obviously we'll see how that goes. There's plenty here for you to be going on with. Let's quickly do ES, then we can end the session. Thank you.